Well, frankly, it is important because I'm not saying whether a 25 bips hike or a 50 bips hike is going to make a change in terms of the decisions right now. But I think the commentary is going to make a very important direction for all of us in the sense that with the events that we have seen in Europe in the last 1 week or so, or the last 10 days, how's the Fed really thinking about it, and also the challenges that we saw with the SVB bank out there. So, how is the Fed really thinking about all of this? Is something what we would really like to focus on, uh, because that will tell us whether is there a change of direction, or is there a pause, or will they continue to focus only on inflation, and because the core inflation still continues to be fairly high, and from that perspective, will they be focused only on that, or will they also be now trying to balance out things? So that will definitely have an impact on the risk, whether it's a risk on or a risk off markets, as you put it.
Sachin, have you been adding on to positions in the last few weeks? In the peak of pessimism, when the prices corrected quite sharply, we have rebound reasonably from there. But have you been adding to positions?
Yes, selectively, very much so. Generally, we've been very cautious in the last 5 to 6 months. If you ask me, because definitely there are two, three things, right? One is that the challenges in the global markets, the uncertainties in the global economies, and also the global capital markets, definitely is casting a shadow on the Indian capital markets also. Additionally, when we saw the earnings season Q3 FY23, which is the December quarter, I think it was also quite evident, and also from the management commentary, that the domestic demand also is seeing some signs of cooling off, particularly on the consumption side. So, we already saw some early signals in terms of things not being as hunky dory as they were probably in the first half of calendar year 22, as far as the domestic economy ground level is concerned. And of course, the valuations are also run up a bit. So we were quite cautious for the last 6 months or so. But in the last 2 months or so, I agree with you that we've been adding some positions in very, very selective sectors, sectors which have been already beaten down quite a bit in the last, I would say, 6 to 9 months, and some of the stocks, some of the large companies over there, say sectors like your in the contract research and manufacturing space, but in the pharma cram space, or some of the selected auto ancillary space, some of the engineering businesses where although those stock prices haven't corrected much, but what we are seeing is that there the management commentary has been very strong as far as their existing order book is concerned, and also their visibility for the new order pipeline, right? So, so very selectively, yes, we are adding some positions.
So, how's the earnings picture looking for your portfolio? Have you scaled back numbers in any proportion? Because the view is that a lot of estimates, earning estimates, need to be scaled back in the new reality.
Yeah, so again, frankly speaking, we generally, whenever we invest, our investment philosophy has always been a bit long term. And when I say long term, we are very clear that when we own businesses, at the time of owning those businesses, we are clear that we want to own these businesses for at least 3, 4, 5 years. And as long as the businesses go in that direction, we want to own it for a longer period of time. Like, for example, in our flagship PMS strategy, which is NK Capital Builder, which I've been managing for now more than 10 years. In my existing portfolio, nearly 50% of the portfolio has a 7 years plus vintage. The next 25-30 is about 25 to 30% vintage. So, 75 to 80% of the portfolio is already a 5 to 7 year kind of a vintage in the portfolio. So, what the point I'm trying to make is that when I take a 3 year view, 4 year view, the next 3 years earnings, 4 years earnings, we are not perturbed at this point in time. Yes, there may be 1 or 2 quarters where we see some challenges in terms of the demand side. Sometimes there are supply side challenges because of some semiconductor and all of that. But other than that, I think secularly we are quite upbeat on the sectors that I just mentioned. So when I think about it over the next 3 years, we are not perturbed at this point in time as far as the earnings visibility is concerned.
Okay, Let me give you one more anecdote. I was just reading today that auto sales, because it's a festive season, Gudi Padwa, Navratra, Yugadi in the south, and there are 4 or 5 regions in the country which are celebrating festivals. And the sense is that festival demand is slightly on the softer side. And indeed, if demand continues to remain anemic, it will eventually translate into slower numbers, is it not? And probably that is what the market has already factored in partly. What are your thoughts on this?
No, to Ajay, you are absolutely right to some extent. And as I said earlier, that the Q3 results did show us early signs of slowdown, particularly on the consumption side. Of course, the auto numbers have been fairly decent, but we have to understand that the auto side we have seen a huge amount of demand supply mismatch. So there is a lot of pent up demand even there at this point in time. As and when that demand gets sufficed or that demand gets serviced, I think we will see the real normal, where we will see some softness across the board. There is no doubt about it. But is this softness a structural thing? Is it a cyclical down thing? Is the key question, right? We believe these are cyclical downturns of about maybe 1 quarter, 2 quarters, 3 quarters. But if I take the next 3 years, 4 years, we believe that the domestic demand will continue to be very strong for all the reasons that we all know about. Plus, we have to understand one another very important part, that today inflation is something which is hitting us, right, in terms of the consumption demands. But I think one very big silver lining that we all are missing probably at this point in time, or I think very important, I think which will play out over the next maybe 12 to 24 months, is that the oil prices have cooled off quite significantly, right? Today we are decisively below $80, and that will also have a very positive impact in terms of lowering the inflation over the next 2 3 years. And if these oil prices continue to be in this range of 60 $70, I think it's a big positive for a country like India, because that has a large impact on our overall inflation, overall consumption, and particularly discretionary consumption starts picking up once the inflation is lower. So I think we are quite optimistic from that perspective.
Sachin, the small cap and mid cap end of the market has been going through a rough correction for almost 18 months. Benchmarks may have corrected now, but on an average 30-40% fall. Benchmark themselves is 25%. Small cap is down 25% from the recent top. So, what are your thoughts on value proposition in the smaller and the mid cap end of the market?
Well, one very good saying about the markets is that finally, markets is an arbitrage machine. It's a very efficient arbitrage machine, right? So yes, one may say that today mid caps and small caps have corrected, and yes, there will be pockets where there is a decent opportunity. But we have to also be cognizant of the fact that along with the mid caps and small caps, we are also seeing decent amount of stock price valuation corrections on the large cap side, right? And if the large caps are offering a decent amount of risk return, the reward ratio is much better over there, probably in some of the selective pockets. And I think the case to say that today small caps are a very attractive valuation is not yet there, because relatively even large caps are offering decent valuations, and the risk reward is quite favorable at this point in time. So I think it's a mixed bag. It's a fairly bottoms up scenario at this point in time. We have decent opportunities across large cap, mid caps, and small caps. To say that it is top down, just to say that it is the time to be in small caps only because they will give you a far better return than large caps, I'm not very sure.
Just one last question, Sachin. What is your one or two highest conviction themes in your space, where you have highest position also, and where you see that the quality of earning structurally is looking very solid and may not get shaken easily?
Sure. So Ajay, as I mentioned earlier, that we are very clear that once we invest, we want to be there for at least 3 to 5 years, and longer the better, as our average holding periods are upwards of 5 to 7 years at this point in time over the last 10 to 15 years now. So we are clearly in the game of compounding, and from that perspective, I think we are extremely optimistic in terms of the export related opportunities today in the country. The China plus one is a reality. In fact, what was a potential for all these years is now actually getting converted into hardcore order books. So when we talk to businesses across sectors, we clearly have a sense that the global customers are there and just waiting for Indian companies to deliver. They are really wanting that they create these alternate supply chains, and at least in there are 5 or 6 industries where India has established its domain expertise. India has demonstrated that it can deliver scale, and where India is also kind of demonstrated to the global customers that we respect your intellectual property rights, the IPR thing, right? So this 6 7 industries, which is the pharma and the chemical space, which is particularly the contract research and manufacturing space, the CRAMS and the CDMO space, auto ancillaries, then your engineering. Within engineering, you have hardcore engineering, power equipment, electronics manufacturing, and some stuff related to defense. So these are few, and also textiles, right? When we talk to some of the textile companies, also we are getting that a lot of these global textile companies
Hmm.
really want to source garments from Indian companies, right?
Right.
So
All right, Sachin.
yeah.
All right, Sachin. Thanks very much for your time today. So that was Sachin Shah of MK talking about how he's approaching the market.